we'll start off with Outperforming Moments, some announcements from Professor Sweet over the scholarship this semester, and then get right into it in the resume workshop with Tim Sterling, who's on Zoom now. If you can unmute and say a quick hello, Tim, to make sure you're here.
Hey everyone, hopefully I'm coming through loud and clear. Look forward to chatting with you guys.
Awesome. Thank you. Okay, let's get started here. So, Outperforming Moments. We did this last week. I get it, y'all were shy, but any great news this week? Any outperforming moments, job offers? Yes. Congratulations. Great job, Jason. Anyone else? Yes. That's impressive. Good job. Nice. All right, let's get one more outperforming moment. Yes. Wow, nice. Congrats. All right, let's continue here. For the sign-in QR code, you do want to sign in every week and attend the whole meeting, because at the end of the meeting, like always, there's going to be 2 gift card raffles. And today's special meeting actually has a separate gift card raffle for the Starbucks gift card. If you were reading our fine print on our messages out there saying if you were wearing merch today, you get entered into a separate raffle. Is anybody wearing merch? Okay. We might need to reschedule for next week. We'll see. All right. Thumbs up when you're done signing in. Okay. Awesome. I think I see a few people still on their phone. No biggie. Just the name and email. All right. We'll go ahead and continue now. I'm going to hand it over to Sweet to give his announcement for this scholarship.
Yeah, so this semester we have a few scholarships, but one we need to get going this week is people who want to enter into the scholarship for teaching a class or leading a sector. So we've got about 5 or 6 so far. We want about 8 or 9. So if you've never taught a class before and you're thinking, I'm not sure I can do that, then that means you should do it because it's good experience. It's not that much stress. You only have 2 or 3 students, so you're not speaking in front of 500 people. And what class could you teach? Well, we're gonna have someone teach Capital IQ this semester. He can use a YouTube video and he'll watch it and he'll just teach what he learns. So it's a really good way. It gets it on his resume. He can teach things that he's teaching himself. So he's learning Capital IQ, which you need to do. Plus he's teaching others, which means he's gonna learn it a whole lot better. We're gonna have a commercial real estate class again, a real estate sector. Someone's thinking about teaching AI or Excel, but we always need Excel classes. We always need Bloomberg classes. And if you're thinking, I don't know if I can teach it, then come talk to me. We'll find something and I'll show you YouTube. You can teach yourself and you just present that. So, and then at the end of the semesters, the EMBA, Executive MBA, UTSA, they have a scholarship, which looks really good on your resume. If you could win it, it's called the EMBA Leadership Award. Anytime the word leadership is an award, that looks great on the resume. So it's a student that's the best leading the class. We're also trying to create a UTSA Investment Society University. So we can get your video, so we edit it so we can put it out there on our YouTube site and you attract users. That's the other thing we're looking for. So if you're not sure, email me, call me tomorrow. We'll find, I'm sure you can, if you're a freshman, you never had a class, I can show you YouTubes that do basic Excel that you can teach. So you're learning Excel while you're also teaching it. So let me know if you're interested. Email me. I don't know if my email's out there anywhere, but email the ronald.sweet@utsa.edu and we'll find something for you to do. If you want to lead a sector, that's probably the easiest of all because we have a process and I'm there and I'll walk you through it. So it's a chance to get something really powerful on your resume, get some good experience, and then maybe win a scholarship at the end, which is money, and you get something else to put on your resume. All right, thanks. Oh, introduce Tim. All right, so talking about resumes, Tim is, well, Tim, I can't remember how many semesters. He was our president for quite a while. It seems like 2 years there, 4 semesters, but he can tell you. He's a very strong leader in investment society, really strengthened it while he was here. Has done great since he's left. I think he's still up in New York, but I can't remember when he was our president. It seemed
It's been some time.
Probably 20 years ago.
Yeah. Yeah. Well, pre-COVID feels like a lifetime for most.
Sorry.
Well, thanks for that intro, Professor Sweet. Guys, you're not going to believe what's happening right now, but I'm here set up ready to kind of turn on my camera, and then I got my son who just got profusely ill, so I'm covered in just the absolute worst. I'm not going to be sharing my screen tonight, but I am there visually in spirit. So with that, warm introduction, maybe we can get right to it. I'm not seeing anyone else's displayed faces on here, so I assume most people are in person. Is that the new framework? I just want to make sure I'm not.
Yes.
Speaking of the.
They're in person here.
Okay, perfect. Okay, got it. Well, to the extent you guys have questions, raise your hand, interject, and let's make this a little bit more of a dialogue. Happy to kind of field those as we go. I think first and foremost, when we think about the resume, oftentimes people consider that to the key that unlocks the door to a lot of opportunities, and I would disagree with that notion. Right. And obviously, whenever you're discussing career opportunities and pathways to what you want to do in life, you've got to take that person's opinion with a grain of salt. Right. That's an observation set of one. But I would just highlight that, in the process, there's a number of different ways and avenues that you can reach your ambitions. And the resume is a necessary part, but usually it's not the critical part, right? Does that make sense? It's not the linchpin to why you get that job offer. So with that, let's think about, what the resume should be consisting of. I have a couple of example resumes in front of me. I've looked at a number of resumes for a role that's opening up on our team. And, just in comparison, these resumes are essentially all the same. They've got education, experience, leadership, and additional information or background kind of things ancillary. But where does an interviewer spend most of their time? And I would say, okay, it looks like this is being recorded. I'm going to temper what oh my goodness, was my intro recorded? This is wonderful. Well, look, let's just kind of level set on expectations for the resume. Most of your interviewers, right, are going to get your resume maybe just a few minutes before your interaction with them. And so to the extent that, your resume can resonate with them, right, in that brief moment, that brief scan, that is worth everything, right? And that's the value add. So how do you plan out your resume to do that? Obviously, you craft it to each role. Unfortunately, kind of developing a resume for each role that you want is critical. That's an important piece. As your interviewer scans through, the places that you've worked at, the education, they're looking for ways of connecting with you, right? They're looking for identifiers that suggest that you can do the job that they need. So to that extent, think about how you create bullets. They should resonate with the responsibilities of that job. Maybe I'll pause there just for now. I know I've been kind of monologuing, and I want to open it up. Any questions initially? And I think that's a no. Okay.
Yeah, not right now. So far.
I'll keep going. So, as a UTSA grad, I'm not unfamiliar with both the resume and then the potential opportunities that are in front of underclassmen that are pursuing their diploma at the university. And I would argue that a lot of the internships and opportunities that we have at UTSA aren't of the caliber that you can get at some top tier institutions. So that's a natural disadvantage, right? So my question for you as you start thinking about your resume is, what sort of experiences can you add onto your resume to capture the attention of that interviewer, and start digging into free activities like free learning seminars or meetups or even global meetups, right? Like, for example, I could go to like leverage finance, like a leverage finance conference or two within the US, or I could get involved with a national organization that's focused on out of court bankruptcy processes or some of these kind of turnaround organizations, right? Like, so you can start to like build a representation of what you're about on your resume without getting the same remarkably good internships that someone at a Harvard or Chicago booth are getting. Okay. Unfortunately, there is a disadvantage. So it's how do we work around that, and how do we kind of round out the profile to give us an equal opportunity? Okay, and the most fun point, and like before, you guys all tune out at this point, the most important point that I think on your resume is you need to have something at that bottom line that interests, okay, that stands you out from the crowd. This could be like you were captain of varsity, squash team, or you're a professional foosball player, right? Like things like that, unfortunately, or fortunately, that is where most of the eyes are going to get drawn to, right? And then your interview becomes more of a conversation about you and that connection to the interviewer. To be candid, most entry-level jobs do not require, a PhD, right? Like they require the social skills and the ability to climb the learning curve. So how do you demonstrate that? Well, connect with the person you're talking to, and then exemplify the points that you're highlighting in your resume through your storytelling. Okay, well, on that point, I just want to drive home that most underclassmen are getting their first internships at the sophomore level. You have freshmen that are going out and pursuing internship experiences at Citadel, or they're getting remote, equity research experience, right? Like that's what I see time and again in a lot of resumes. So I don't want to, disenfranchise anyone or kind of dissuade anyone from, feeling like they're too late to the race. But the earlier you start, the better. And the more broad experience set that you can bring to your resume that pertains to what you want to do, the better. Right? You have to think outside of the box when you're coming from UTSA. Okay, any questions there?
You can raise your hand if you have a question and I'll hand you the mic. Yes. Did you hear the question, Tim?
I did not, but I'm sure it was a good one.
Okay.
Can you hear me?
Yep, gotcha.
So my question is mainly, so what I'm understanding from what you're saying is that it's due to the fact that we're, barely starting off, is your selling points on your resume should be more of a social, perspective than more of a educational one. I mean,
Yeah.
I'm disregarding the education part, but
Yes. Just to maybe if I reword that, to what degree do you like have to leverage kind of the connection versus the education experience, right?
Right.
And that's a good question. The vast majority of interviewers want that social connection, unless they're highly analytical and they're focused primarily on the needs of the desk. So that's like point one. Can you connect with the person in front of you? That's what the social aspect for, but it's not, the primary needs of the desk. Unfortunately, and this is what you lead into, in order to get through the door, right, and even get captured by human resources or the admin that's looking at your resume, the education, the experience, and like the development profile needs to resonate as someone who's, you know, well above the qualifications or needs of the job, usually is what they want to see, but someone that can hit the ground running. And that's the difficult part. Excuse me, I'm gonna close my door. Yeah, obviously with the okay, give me a minute. Sorry. Okay. Sorry, guys. You may have some background. Obviously, we're having issues over here. Don't let my comments kind of suggest otherwise. You know, UTSA, how you perform your GPA is critical, right? Like that's checkbox one. Are you an outperformer in your educational standing? You know, checkbox two is what have you been doing with your time for this occupation? How have you been directing your career thus far? And I don't mean to be blunt about this, but you know, working at HEB is not sufficient, right? Being a tutor, while commendable and does pay a pretty good hourly wage, is not sufficient, right? I hope that's, you know, relatable and you guys understand where I'm coming from. But you have comparable juniors and seniors that are pursuing the same occupation that you want, right, with similar degrees, and you know they have the introductions into the internships. They've got the family relationships that open up those doors, and you're going to have to work around that, right? And that process starts earlier rather than later. I hope that was helpful.
Definitely, Tim. Okay, we have another question here.
Hello, Tim. I wanted to ask, what do you think about putting on your resume like political things such as like campaign working stuff on, and like whether it's conservative or liberal organizations you're a part of and you participate in? What do you think about putting that on your resume?
Living on the edge, huh? No, I don't think it's necessarily negative, but I would craft it in a way to exemplify like skill sets and capabilities that you think are going to be valuable to your interviewer, right? So it doesn't matter left or right. If you managed meetings of upwards of 500 voters and you know led discussions to initiate you know a ballot change, or you know you've interacted with you know senators or congressmen in an effort to drive change, right, in some form, like that would be great. Maybe don't dive too deeply into your political leanings, but you know I think that's something that could be worthwhile.
Awesome, thank you. We got another question here.
Let's go.
Hey, Tim. I just wanted to ask, if you missed the process of getting an internship early in your educational career and you're starting to get into your senior years, do you have any suggestions for catching up to your peers and your rivals?
Yes, some of it may not be. Okay, is anyone from the College of Business in there besides Ron Sweet? Okay, okay, I'm going to take that as a no, hopefully.
Repeat that. Sorry, we didn't catch that.
Oh, okay. In terms of employment, all right. I don't want anyone to chase me down. For this next point, you're never too late to think about what the next steps are. However, I'm of the mindset and view that because it's UTSA, you really only have one shot to transition your future, right? And how you come out of the undergraduate experience. But there's decision trees, right? Like you could decide, looking at your opportunity set at UTSA, coming out that, you know, this is not enough for me. Okay, what does that mean? Okay, maybe I need to do a 1-year finance program out of Vanderbilt, or I need to go up to Syracuse University and get something better, right? And I say better, like it's a more well-known school in the Northeast, i.e. kind of it raises your prestige factor from UTSA. Or if you're, an upperclassman that's going to be leaving very soon, you get to start thinking about, okay, if I'm not making my target destination role now, what is the intermediate role that I can get, right? That may not be as desirable as the one I want now, but will give me all of the experiences and the toolkit to do that job in the future. Like that's kind of the second order thinking that has to start happening. And I can give you an example. Say, for example, you want to work in leverage finance, where I'm at, right? What could be the good intermediate step if you're unable to, one, get into the investment bank, and then two, get into this type of role? Well, maybe you take the middle step and you go work for a ratings agency, and you start building the credit risk toolkit, right? Evaluating corporates. Or maybe you're working with ABSs or other kind of securitized deals through credit ratings. You start to understand how to do credit analysis, what it means to have a rating, and how does the market respond to that, right? You become educated in something that you could not otherwise get, right? And to work at a rating agency, you're getting that large corporate organization experience, but also making yourself very valuable to the next place you go to. Another role would be going to a large consulting firm, right? And getting a role in say EY and thinking about transaction advisory. Again, another area that's not particularly attractive towards for those upperclassmen from a prestigious background. And so there's less competitive dynamics going on if you're trying to get there. However, while you're there, you're being educated on M&A, you're learning the accounting practices, you're developing your corporate expertise of how to work in a large organization, you're thinking about buy-in, you're becoming a refined employee that's going to make you immensely more valuable when you lateral over. Right. I would just argue to everyone that the story isn't written in concrete yet. Right. Like it's malleable, it's adaptable. You've got an eraser on the future that you've already penciled in. You can take another view.
Great advice. Does anybody else have a question? Okay, there's quite a few questions. Tim, sorry.
Yeah, definitely. Let's keep going. I think my kiddo's feeling a little bit better, but you may hear him in the background. Okay.
Hello? Oh yeah, you can hear me.
Yep.
I had asked earlier, like, how late is too late for an internship? I'm currently a junior.
Okay.
And right now I'm interning at the San Antonio Zoo on the marketing team.
Okay.
And, well, I mean, to me, I guess that's kind of a start, but at the same time, hearing you say, once you gain, up to the upper class, it's kind of a little too late. So it's kind of discouraging me, Tim.
I know. And I don't mean to do that. Right. But so like how much longer do you have on the college experience? You said you're in your senior year?
I'm a junior right now.
Junior. Okay. So, you're going to have to evaluate, like, to what extent are you willing to commit to more education, right? Like maybe you've been performing well with your GPA, with your education, and you want to think about, like, is there a way to lateral to something, at the master's program, that's cheap, right? Because all of us here are very cost conscious, but will open up those pathways that you weren't aware of because of, just the resources that are available to us, right? Until it's too late. So that would be, my view, because I sat down with someone when I was kind of making this transition. I was having a rough go of it in New York, and he had recommended, yes, you can lateral in from a role, eventually, right? And that's the EY path. That's the or the credit rating agency process or pathway, like these kind of ancillary paths to what you want. But he also mentioned that you could take the easy route, which is go to a prestigious program, get the credentials, and go right in the front door. And I will tell you that almost no one opened the door for me with my UTSA background. And the moment I pursued it in NYU MBA, I had dozens of investment banking opportunities and had to decide, which way do I want to go? Like leverage finance, M&A. I mean, it was surreal to have that kind of on off switch. But that's the nature of the workplace. That's the nature of the HR practices, right? And so again, this is the investment banking path. If you're going sales and trading, right? If you're going some other direction into finance, the gating factors may be different, right? You may be able to prove your skill with a diverse education, right? If you say you're pursuing mathematics, say you have computer science, things that are not easily replicated by your top tier BBA finance grads at Harvard, at Yale, at Stanford, those types.
Thank you.
More questions?
Let's keep it going.
Are there any moments in your career that you think were key in your personal career development that kind of maybe influenced a little bit in you getting to JP Morgan?
Yeah. I've got what's the term for a double-edged sword? I think it is, right? I think taking my first role out of UTSA was both the worst and best decision that I could have made. On the one hand, and I'll start with the best. On the one hand, the job that I took out of UTSA, going to Goldman Sachs and their operations group, right? I took that knowing that it was the brand name. That's why I was taking that occupation. I wanted nothing to do with the career or the job, but I needed the name to refine my resume away from UTSA, and that did it for me, right? Like that was sufficient to start other conversations. And at the same time, it was the worst decision because I had the I felt, and this was my failure. I felt that I could move laterally within the organization regardless of what my job was, purely because I had the drive and the ambition to work in finance. But that's not the case in the workplace. There are assumptions that are made about both occupations, the people within those occupations, and general assumptions about capabilities. And as you begin to move into the workforce, you're going to begin to observe these as careers progress, and as certain people you interact with kind of provide those preconceived notions, right? So I did not know that there was such a derogatory view of operations until I was in it, and then found it extraordinarily difficult to get out of it, right? So with that in mind, I hope you don't make the same mistakes, and you go into whatever career you choose with open eyes and an understanding of what it's going to take to transition. Because like I said, coming out of UTSA, you only have one true career shot, right? That first job to kind of transition yourself to where you want to be, or you need to make that transition quickly enough after that first job in order for it to not take up very much space on your experiences, right? And your work history. One other aspect that I haven't highlighted yet is that UTSA has a lot of value as a diversity school. And to the extent that you can, showcase that diversity, that can open up many doors. People in top tier schools, they're not that diverse. They look and feel the same one after another. So to the extent that you offer something unique, such as myself, I was a U.S. veteran in the military, that can change your path. But that isn't available to everyone. And to those that don't exemplify today's definition of diversity, you're going to find it difficult.
We got one more question here.
Hello, Tim.
Hey,
So a lot of us here are taking, Professor Sweet's classes, and he has a pretty high emphasis on papers. And so I would like to ask a couple questions about what your thoughts are on papers while in undergrad, and if there's any good tips you have for writing excellent papers that might give you a better look at a job.
That's an interesting question. I would say your communication style will change as you move into the corporate world. Less emphasis on is put on your ability to create like a fulsome argument in a one-page doc, and it's going to shift towards, can you convey information like the front of the New York Times, right? Like, can you get me a concise delivery of whatever you're trying to tell me? That proceeds into your email correspondence, how you create slides, how you try and highlight information, how you design pages, and that becomes the focus. And your ability to summarize information and provide that in a distilled form, it's immensely valuable. So if you can develop that over your undergrad career path, handwritten notes, taking it down digitally, OneNote, things like that, that's very helpful. And get comfortable with that, because that's how you're going to correspond with your seniors, with people that you work with, throughout your career. And not to speak negatively to those papers that Ron has you creating. Those are very helpful of constructing arguments and developing a way of thinking, right? If you can write, then you can think. So I think that, not to make the pun, I believe that is what he's trying to stress at when you're working on those docs.
Great advice, Tim. I think that concludes our time here and questions. Maybe we can, does anyone have one more? All right, that sounds good. All right. Yeah.
Okay, great. Well, I hope this has been helpful and a productive use of time. Again, I don't want to leave this session with anyone thinking that, they're out of luck and they don't have, an opportunity in front of them. I think there very much are opportunities out there, but at UTSA, you've got to be creative. You got to be very creative, and you have to understand that, your opportunity set, your ability to make future decisions about your opportunity set are limited. So whatever decisions you make need to be, well thought out, and be done in consideration of that paradigm. Okay. So good luck to everybody. Feel free to reach out to me if you want to discuss more, you want to talk, different topics and ideas. Be creative, do all the research you can, Wall Street Oasis, all those kind of online portals to discover jobs and other ancillary things that can get you on the path to what you want. Sometimes you can surprise yourself with what you can uncover, but wish you all the best of luck.
Definitely. Thank you so much for your time, Tim. Let's give it a round of applause. Great takeaways.
Thanks, guys. Take care.
Yeah, thank you. Feel free to stick around if you have the time. Let's continue with our general meeting. Hope everybody got some great takeaways from that. And I will be sharing his contact info through our Discord and Telegram whenever that's available here. So this is our first general meeting where we're going to have all our presenters come up here to do a short little recap. So I'm going to introduce Juan Carlos Sanchez for the market outlook.
Hello guys, I'm Juan Sanchez, as y'all can see. So since this is pretty much the first meeting that we're, not just introducing ourselves, I would like to ask, do you all know what the S&P 500 is? Yes. I was expecting hands. I'm sorry I didn't ask. So the S&P 500 is made up of 500 large companies that are traded in the US stock exchange. And this is basically just a benchmark for how we expect the market to be moving in the future, or how essentially a thermometer is the way I like to think about it, how the markets are moving. And a good way to determine, how they're moving daily is by their change of 1%. A 1% is a really big day for the S&P 500 to be moving. As we can see here, a little chart. I hope y'all can see that decently all right. That's for the past, all the way from January. So as we can see there, this is the way it closed today at 4,117 points. So it decreased 46 points. And as y'all can see, I mentioned before, a big day, 1%. That's the standard deviation. So the way it can move per day, and it's negative 1.11%. So y'all think that was a good day, bad day? What do y'all think? Now it may be a normal day, but it's a bad day. And what we have also, the Russell. We have the Russell 1000 and 2000. The Russell 1000 is made up of 1,000 large cap companies, and the Russell 2000, which is small cap companies, which are smaller stock traded companies. And here we have a little chart of the S&P 500, the Russell 1000, and the Russell 2000. So I mentioned before, it's a good benchmark of how the stocks are moving in general. And here we can see that they are pretty much moving pretty evenly together, with the Russell 2000 made up of small companies performing a little bit better than the others. Now we have the 10-year Treasury. So the 10-year Treasury is basically just bonds. I know Alex will be talking more about bonds. So the 10-year Treasury is a good basis for our risk-free rate, which is my mind is going blank. I apologize. So the Federal Reserve usually changes these rates, either raising them or lowering them in a chance to lower or boost the economy. So they lower interest rates by an attempt to boost the economy. And what they're doing right now is they are raising rates in an attempt to slow down the markets. So the market, the S&P 500, generally doesn't like high interest rates because they're going to have to spend more to borrow. And I don't know about you, I wouldn't borrow $5 and have to pay $10. And here we have the Treasury moving from the past year. Pretty wild. It went up to a high 4%, yeah, 4% last semester. I remember I was taking a class and that was a big move. That's what I have for now. I hope next week a little bit more interesting. And the S&P 500 and the 10-year Treasury, y'all should essentially be looking at it daily. It's a pretty good practice to get in on starting to look at things daily, keep track. You might want to list like the big days, small days. And now we have Alex for the economic perspective.
How's it going, guys? So I have some quick questions for you guys. How many of you guys are finance majors? Yeah? How many of you guys, we had Tim Sterling on here today. He's an investment banker in New York. How many of you guys have those kind of aspirations to get into investment banking or private equity, kind of these, high prestigious roles, right? We all want, yeah, I see some hands. So, Juan Carlos said, the 10-year treasuries are risk-free rate. And the risk-free rate is important, right? So I'm going to get into bonds, and you're going to see that bonds, are important, not only for our economy, but for finance majors, right? It's the risk-free rate is used for valuing companies or stocks, right? Or securities, my bad. So here we're going to get into a little bit of bonds, or introduction into bonds. The bonds prices is the face or par value. So bonds are usually issued in increments of 1,000. So let's say a bond gets issued at $1,000. That's going to be their face value. And the market price can move either way. It can go up or down, but you're always going to get paid your coupon rate at that face or par value, right? So the price can fluctuate due to, maybe the credit issuer, is going bankrupt or something like that. Their credit rating is going down, maybe from an AAA to a AA. So that can affect the coupon rate or the yield. So that kind of moves the prices of the bonds. And so the bond yield is the rate of return. So you see this picture here, and you see that the shorter bonds, the shorter treasuries have a higher yield than the longer term treasuries. And so do any of you guys know what that means when a shorter treasury, let's say a 2-year, you see it here at 4.466%, is more than the 10-year, which is at a 3.679%. Anyone know? Yeah, I mean that there's a lot of risk in the short term. So when that happens, there's an inverted yield curve, right? So an inverted yield curve is important because it indicates that there's kind of a trouble in the economy, right? So it kind of says that it's been a historical indicator that there is a recession coming, right? There's going to be a recession coming. We might go into recession, and so you'll hear a lot of it on the headlines, on the headlines and in news articles saying that that there's an inverted yield curve. What does that mean? Is there going to be a recession? And so we've kind of had that for quite a while now, right? And so we've gone two negative GDP quarters of growth. So that kind of indicates we are in a recession. But as you saw, I said last semester as well that they kind of dissed that and said we're not really in a recession. It's just the market we're in right now, right? So it is important. And so right now we're going to get into kind of how these yields work, right? So when the price goes up, the yield is going to go down, right? So they work inversely; they're inversely related. So when the yield goes up, the price falls, and vice versa. So he has this picture right here. So if the yield rises, the price falls. And so how this works is that let's say that you're making 10% on a $100 bond. That is what its par value is at, and say the current market price is $100, right? So you're going to get a 10% coupon rate. $10 coupon, right? So that's 10% yield. Now let's say that all of a sudden the price falls, it goes to $80. That means that the Fed is raising rates, right? The Fed is raising rates, the yields are going up, there's less money, there's more money going out of the bond market than going in. So the market price is going to fall. And so you're still getting paid that $10 coupon, but now you can buy it at $80. So now you have a yield of 12.5%, right? So that is kind of what's happening right now. What is happening right now, right? So the yields are increasing because in the short term, because there's more risk right now, and the Fed is selling a lot of their treasuries. As I'll get into the next slides, the Fed is engaging in QT, which is quantitative tightening. So they're selling a lot of bonds, a lot of treasuries, mortgage-backed securities in order to increase those interest rates, right? So we want to bring down inflation, and so one way to bring down inflation, or the major way to bring down inflation, is raise those interest rates, right? So the prices fluctuate due to monetary policy, which is what I just said, right? So the Federal Reserve will raise or decrease interest rates, and that'll change the price. And there's a supply and demand, right? So if there's more demand for long-term treasuries, then that'll increase the price for the long-term treasuries and lower down the yield. And there's bond rating changes. And so there's actually this interesting thing that happened recently, right? So we got into these debt ceiling, right? So we started hearing a lot about the debt ceiling. And so in 2011, there was actually a crisis, I guess, with the debt ceiling. And I think the S&P 500 knocked the U.S. Treasury's rating down, which shot up the yields. And so for that, because the yields rose, these bond prices decreased. And so I guess just so you guys can understand that why the yields rose is because when the bond rating decreases, that's going to increase, that means that it is now more riskier to invest in. So if it's more riskier to invest in, the bond or the investors are going to ask for higher interest rates, right? So they want more money back because now it's riskier to invest in. That's why stocks people expect a higher return in stocks because stocks are riskier than bonds. So, if the bond rating increases, then, the interest rate, the coupon rate on that bond might go down. If the bond rating decreases, it's likely to go up, right? Because it is now more riskier. So understanding the yield curve, right? So there's a normal yield curve, and there's like a flat yield curve, and there's an inverted yield curve. So the normal yield curve is what we want to see, right? So you can see the normal yield curve, it goes up. See the x-axis is the term to maturity. So you go from 3 months, 6 months, a year, 2 years, 10 years, 30-year treasury bonds, right? So 30 years on the farther right. Yeah, my right. Yeah, you're right too. And the higher yield up. So it is normal when you have the long-term treasuries to have a higher yield, because when in a normal time, it is more riskier to invest in the long term than it is in the short term, right? So you don't know what's going to happen in the long term. If I invest into a bond that's 30 years, say if I invest in a bond for a company that's 30 years, that company can go bankrupt in 30 years. And so it's more riskier. So investors are going to demand higher interest rates, right? They want more money. And so when there's an inverted yield curve, that means that investors are perceiving that there's more risk in the market, in the short-term market. So that's currently what's happening right now, right? So right now we're kind of volatile, we're in a volatile time, and there's fears of recession. There's inflation that's high. So investors are kind of perceiving this time as a riskier time, and so they're demanding that there be higher interest rates, right? That's one reason. The next reason is that the government is also selling a lot of treasuries, all of their treasuries and long-term treasuries too. But that is the main reason, right? So investors are asking for more interest rates because it is riskier right now in the short term than it is in the long term, right? So an inverted yield curve, like I said earlier, also it says that there's probably an economic downturn that's going to happen, right? It increases the risk for not only the bond market but for the stock market, and also a signal of a recession. So I'm gonna get a little bit into kind of how the Fed moves these rates, right? So there's several ways. These are kind of the main ways, right? So they engage in open market operations. So this is just they go in there, they buy short-term securities, treasury securities, or sell them, right? So they buy them. That means that they're decreasing the interest rates on that. So we're going into a more of a better economy, right? So we're growing, and right now we're kind of shrinking. Not shrinking, but the Fed is selling them, so inflation comes down, right? They also adjust reserve requirements. The Fed can raise or lower the requirements. So that's in the federal funds rate. So that's what banks charge each other, right? So they can lower the requirements, and so it becomes cheaper. They lower it, becomes cheaper for banks to lend to each other, and so it also becomes cheaper for us. So there'll be lower interest rates for us. And then the other big thing that that the Fed has been doing, I think since 2020, that they engaged in a lot is quantitative easing, right? So quantitative easing is when they buy these these long-term treasuries or mortgage-backed securities. So this is engaged when the Fed has bought in a lot of short-term treasuries, and we're already at like near 0% interest rates. So when we're near 0% interest rates and we still need more money to help the economy out, the Fed will engage in quantitative easing, right? So this will flood more money into the economy and make it cheaper for investors to borrow money and invest in the market and buy goods and for companies to buy goods and inventories and things like that, right? So that's what they engage in for quantitative easing. And right now we're engaging in quantitative tightening, right? So the Fed is letting these bonds mature, or they're selling them. And these are usually like 30-year bonds, right? 30-year treasury securities or mortgage-backed securities. So right now, I think since September 15 of 2022, they've been selling or rolling off $60 billion of treasuries and $35 billion of mortgage-backed securities. So the goal is by the end of the year 2023 is to have a total of $1.5 trillion of treasuries and mortgage-backed securities rolled off, right? So that is a lot, but we got up to, I think we doubled our balance sheets since I think 2020 till now. So we're at 4.5 trillion, I think, and then we ended off at 9 trillion. I think at the start of 2023 is when we had June 2022, we had 9 trillion. And so now, I think it's about time we reduce that balance sheet, right? There's also the pending question is how much, or if we reduce it by too much, what will happen to the economy, right? So there's a lot more things we can get into there. So that's all. I think that's all I'm going to say for today. You guys have any questions? Yeah. Yeah, so it's the shorter term treasury securities, like the 2-year, 10-year, maybe the 10-year. Yeah, so it's 2-month, 3-month, and things like that. They're going to sell or buy. So that's how they change the shorter term treasury securities, and so they want to change, your mortgage rates. They'll start doing quantitative easing or quantitative tightening to buy mortgage-backed securities to change the rates, right? Or long-term treasuries, a 10-year. 10 years is kind of like attracted or not attracted. It's tied to the mortgage rates, right? So it's usually I think like 1.75% on top of the yield of the 10-year yield. So right now, let's see, we go over here. Let's see the 10 years at 3.679, and so usually the mortgage rates are going to be like plus 1.75 above that. So in normal times. Does anyone have any questions? I can answer any questions right now or. Yeah. Well, so the yield's going to go up, and the price is going to go down because let's say the bond, let's say the Federal Reserve is going to sell a bunch of any bond, right? Let's say they're going to sell a bunch of the 10-year Treasury. That yield is going to go up because now there's less money in that, right? There's less money in that bond, and so now the price is going to go down because how supply and demand works. If there's lots of demand, the price is going to be able to set higher, right? So there's less demand, the price is going to drop, right? So it's also the same way with supply. And there's a lot of supply of something, the price drops. And if there's a lot of supply and or there's less supply and more demand, the price is going to increase for that, right? So it works inversely, right? So if let's say the Federal Reserve is selling these treasuries, and so they're taking out the money, and so the price of that is decreasing, right? So now there's less demand for that certain treasury, and so the price of that is going to decrease, and the interest rate is going to rise, or the yield is going to rise, because now you can buy that at a shorter price or at a lower price, right? So this is like what I said here. So they say it's at 100, they sell the yield, or they sell the bond, and so now there's less money in that, and so the price drops, and so the yield is going to increase because now you can buy that same bond for $80 instead of 100, and you're still making that $10 coupon. Got it? Did I answer? That's a good question. I would assume just that it's just on their balance sheet, just not in any treasuries, right? So because they're selling it, but it just it goes. It's not real. It's really they don't buy this like necessarily with like real money. It's a lot of like electronic money, right? That they just buy these things for. But I'm pretty sure. Yeah. Anyone have any other questions? Yeah, you want the one with the higher yield, right? So if you buy the $100 one, and then all of a sudden it goes down to $80, it's like, damn, you could have had the higher yield and bought it at $80, right? Yeah. So yeah, you do want the higher yield. So like right now, it's a good, let's say right now or earlier this year, it would have been a good time to buy, right? So say you bought, not a good time to buy, it's to wait, right? It's because someone would have gotten hurt if they bought right now. So say they bought at 100, and all of a sudden, we keep increasing interest rates. So now the price is going to fall and the yield is going to rise. And so now you're going to miss out on that yield, right? So yeah, that's a good question. Yeah. Any other questions on it? You guys can ask me after the meeting. Yeah. So, I mean, yeah, that we have, the US government has never, defaulted on their loans, but that is a reason why there's like, I guess this kind of scare around the debt ceiling, right? So if we do default on our loan, then, that can be detrimental for the US economy, but also for the world economy, right? So there's so many other countries that hold US government treasuries. So yeah, I doubt we're going to default on our debts. When has the US government ever defaulted on their debts? Right? We can always print money out of thin air. So there's that. Everyone, Alrighty, let's connect with me on LinkedIn if you guys want. We got Brian next.
Hi guys. I hope everybody doing well. We don't have enough time, so I'm gonna try to go with as quickly as I can. So what is M&A? M&A stands for mergers and acquisition. It's referred to a process of combining two or more companies into one entity through a merger or an acquisition. And there are some differences between the two. Merger is when two companies join together to become one. But for acquisition, one company buys another company and adds to the portfolio of businesses. And as you can see the picture of the chess, this happened, like imagine when two kings finally decide to join together to merge the army, make the military stronger. But I guess it won't ever happen in the chess industry. And there are many reasons for company to go through M&A transactions. But there are 5 main key points I want to point out, which are economy of scale, market dominance, revenue growth, cost saving, and strategic diversification. First, let's talk about economies of scale. It refers to a cost advantage that a company experiences and is growing in size. And by combining the operation of two companies, the new entity can achieve economy of scale, which can result in lower cost and increased efficiency. Market dominance, exactly how it's a firm, is when a firm tries to control a market or an industry. And the best example I can think about is you can see the man up there, the cartoon version of Rockefeller with his Standard Oil. So by acquiring many small businesses and take down his competitor, he soon become a monopoly in the oil industry. And by doing so, he was able to achieve revenue growth and cost saving. Cost saving is when you is reducing costs through elimination of duplicate operation, like when two companies operate to produce the same thing, consolidation of overhead expense, and streamlining of processes. And also, because he's dominant in the oil industry, he has the pricing power to price however he wants to increase the revenue. And last of all, we have strategic diversification. It's an expansion into new businesses or markets to reduce dependence on a single product or market. And I'm pretty sure all of you have your stock portfolio or try to make one. And one of the things we always hear about is that don't put all your eggs in one basket. So the same thing for businesses. They don't want to put all on just one product. They want to expand it as much as possible. And an example I can think about, let's say Amazon, an e-commerce company, but why they acquire iRobot, which is the robotics and consumer product industry, because it allowed them to expand their products in different markets and industry. And by diversify their businesses and reduce dependence on a single product or market, this can result in increased stability and resilience for the company. That's about it. Thank you.
Thank you. Thank you very much for our presenters here. And I'm going to remind y'all once again, Sweet mentioned this in the beginning of the meeting, either way, that we are still looking for teachers for classes and sectors this semester. So if you're interested, definitely reach out to Professor Sweet through his email that we'll share, and he's on our socials either way. There's some quick information on it too. I'll rush through these slides since it was a long meeting. I wish I could let you go, but there's a lot of important information to go through. So we put the schedule out last week as well, but these are some updates. The Market Watch competition is currently live. So if you're not in it, you're going to want to join it because it's no risk and high potential to earn money if you make it to the top 3 of the leaderboard. And then an upcoming date is February 10th. We're going to have a study night already with the Stats Association, the Stats org here on campus. So that's Friday, this Friday already. And then we are actually working on a panelist discussion this month, February 23rd here on campus. February 23rd is on a Thursday, 5 to 6 p.m. The details are still being worked out, but we so far are for sure going to have Frost and Victory Capital come in person, and hopefully JP Morgan if Career Center can help us out with that. They'll be present here. Scan the QR code. That's more of an availability, see how many people we're going to have so we can reserve the room. Definitely don't want to miss out on this because we're going to be asking them questions on just the current market and economic outlook that's going on. Thumbs up when everybody's scanned. If not, I'll be sharing this on our socials either way. And this is the study session flyer here for this Friday as well. I know I have work to do, and usually it helps when I schedule it out throughout my calendar. So I'm going to use this time to work on my risk paper. Definitely feel free to join. We're going to have snacks, and it's here at the JPL. Those are the 2 location rooms we're going to have with the stats org. And the stats org also wanted me to invite everybody here to the SAS Studio workshop. If anybody's interested in that, scan the QR code, take a photo. I will be sharing this on our socials. And this is the QR code to join the Market Watch competition. You don't want to miss out on a free opportunity to win free money if you're a good investor. And take high risks. It's pretend money. So like put all your eggs in a basket. Do the opposite of what everybody says. Passwords lowercase invest. All right, awesome. And once again, we are selling our shirts and polos. So if anybody's interested, now I think I'll pass it over to Jaid to do that raffle for the 2 gift cards. We're going to schedule for the Starbucks one next week. So next week, come and merch so you can have another opportunity. Let's get a drum roll for the first gift card.
All right, so it's gonna be William Wojcicka, something like that.
Congrats. All right. Yeah, you can come down here after the meeting, which is like in a minute. Another drum roll here for the second gift card winner.
All right. It's gonna be Oliver Iracheta.
Congratulations. All right, gift card winners. That concludes our general meeting for tonight. See you all next week. Stay active on our socials and stay informed because we do have a lot planned for the semester. Have a great night, everybody. Sorry for the 2 minutes over delay or something.